Hey guys, I've had a few requests for a video talking a little bit about leverage, risk management, and order types, so I figured I'd make a demo account and do this quick little video as a bit of a blowfin tutorial for at least the stuff you hear and see me talk and post about between live streams and Telegram posts. So first I want to talk a little bit about risk management. Understand that no matter how good of a trader you are, risk management is still key. I personally don't like to lose more than 1% of my trade account when I lose a trade. Of course, everyone has their own level of risk tolerance, but understand that even with a back-tested trade strategy, you need to be able to survive this market. If you are putting way too large of a chunk of your account in a trade, you can easily blow up your account, and it's very hard in general to recover from losses for so many reasons, you guys. Let's put it this way. If you see a perfect trade setup and you decide to throw risk management right out the window, you throw half your account on the line without a stop loss and you end up getting liquidated overnight because no matter how good a trade setup is, you can and will lose trades, I promise you. You have now lost half your account and now you need to double your remaining account to break even. So it actually takes a 100% gain to offset a 50% loss like that, not to mention trying to achieve that with a badly damaged level of confidence. So moral of the story, if you decide to trade heavily and lose some trades before winning, it may become very hard to recover very quickly. I'm personally used to the numbers that I typically trade with, you guys, so I basically do a rough estimate of numbers in my head because let's be real, when I'm trading the 1 minute or the 5 minute, if I am catching something last minute, for example, I may want to set an order now and not sitting around doing math first. However, if you are less comfortable with numbers or new to calculating leverage and stuff like that in general, something you should definitely look into would be to Google some sort of position size calculator or leverage calculator, whatever you need a hand with, basically. You can see here I just Googled crypto position size calculator. Boom. Seems here pretty straightforward. Like I said, this is just a demo account and it comes with 50,000 US dollars. So let's just throw it in here, for example, for basically just setting, I want to go over some order types and this risk management a little bit. I'm just going to basically take some pretend positions, set a few orders and stuff like that for demonstrational purposes. Honestly, I recommend doing this yourself just to get familiar with the exchange. But like I said, crypto position size calculator, so account balance $50,000. Like I said, I don't really like to lose more than 1% of my account on a position. Let's just say right now, you know what? Gonna take a short right now. I have no idea if this is gonna play out, but the price is 82,640. 82,640. And let's just say my stop loss is up here. Call it 83,133. 83,133. Now I can calculate and it will show me how big of a position size that basically I can have while only risking $500 out of my $50,000 account, right? So the position size would be approximately $84,000. There's the stop loss, the entry price, etc. There's some that you can do the same thing, figuring out leverage and stuff like that. Going to talk about that a little bit in a sec. But yeah, so that's what I'd be basically looking at. So there's a few different ways I can take this. So let's just call it 1 Bitcoin, right? 1.01 or whatever. I'm going to use a market order. So boom, 1 demo, boom, short. Now is where I'm going to set my stop loss. So like I said, 83,133. So I'm going to click on this 83,133. So I would actually lose 540 US dollars. So very close to that 1% that I was aiming for, right? So basically have a stop loss up there. I could also set a take profit down near the bottom of this range here. You know what? Let's do that. Where would be a reasonable target if we are going to push to the bottom of the range? Let's just call it this 786. Let's go 81,933. So I would end up making 660 US dollars if we end up hitting that 786. Again, this is not a real trade or anything like that. This is just demonstrational purposes. But that being said, so that's a market order, right? The market order basically got me into a short immediately because I wanted to be in it because we were getting near resistance here for if this downtrend is going to continue. Just because we had this low, lower low, technically lower high, find a little double top there. If this micro downtrend is going to continue, we shouldn't really break past that. So that's the idea there. But let's just close this now. I'm just going to close it. You would do this if you wanted to market sell or whatever. You can just click close all, and then boom, your position's closed immediately, right? So that's how market orders works. The fees are a little bit higher. I can't recall the exact fees. You can look them up for yourself. But limit orders is another one that is a very typical type of order that I would use. So something like this, for example, let's just say that I want to play this bullish STUBER, like I said, looking at that 786 kind of a thing. So typically I would actually be laddering in entries if I was going to take a long on this kind of a setup. I'm not going to get that in depth with the position sizing. But let's just say I wanted to enter at the 786. Actually, no, let's call it the 886 because that would be a lot closer to the average entry that I would get. So let's just call it, this is going to be for a limit order, and I can set it down at, let's call it 81,666. And my stop loss, let's call it 8777. Again, risking 1%, calculate it. And so around the 886 here, if I wanted to risk 1% of my account with my stop loss down here, it shows that I would use approximately half a Bitcoin, right? So in that case, if I wanted to do that, limit order, what did I say? 81,666. Call it 0.5 Bitcoin. I can also set a stop loss ahead of time. So like I said, 8777. Then in that case, it'll tell me that I would lose 444 bucks if I'm wrong. If I'm right, let's just say we get back up to this level, then I could also set, call it 83,333. And I would make $833 in that case. But you guys who are familiar with my trade style know that I typically don't take profits on my entire positions. I like to let some run. I like to ladder in and out of my positions. But just for demonstrational purposes, boom, there we go. Long position is set. And we go from there. Another type of order you guys will see me talk about from time to time is trigger orders. I often use this to pay myself on part of a position if I'm playing a downtrend. So in a case like this, let's just pretend I was already in a short because of this. We got very close to a 786 there. Let's just pretend I was in a short from this level here. So this is not going to match up, right? This is just, let's just pretend here, and this is not about position sizing or anything. This is just a different order type I want to talk about. But let's just pretend I did enter up here, not actually down here. And let's say in that case, I want my stop loss to be above this level, right? When I first entered the position, or even how it is now. Let's just say I continue pulling and finding the trend here. So let's call the stop loss 84, call it 277. So I can set that 84, 277. So I got my stop loss there, not worried about amounts or anything again. But I want to talk about this trigger order because let's just pretend again that I'm in a short from up here. And now like I said, there still is this downtrend here because we have this low, lower, low. We have our lower high here, which we're still struggling with resistance there. So if this micro downtrend is going to continue from my short, I wouldn't really want to see us get above this level. So in that case, what I will often do, especially when I'm scalping and actively trading the 1 minute, for example, I like to chase micro market structure like this with part of a stop loss. So what I mean by that is I could set, if I had my full stop loss way up here, or actually at this point, let's say, since I have a bunch of profits here, let's say my stop loss is actually at break even. But let's say I wanted to make sure that I lock in some more profits on the way up. If we end up invalidating this, I could set a trigger order for this level. So let's call it just above 83K. So trigger order. Trigger price, I'm going to call it 83,013. An amount of Bitcoin, how much is in that position, half of a Bitcoin. So let's say I wanted to close half, I could just do a 0.25. And I should be on close as well to make sure I don't accidentally open up another position. If I'm on close, then the only thing that can happen is it can reduce orders. So that's what I want, just so I, like I said, don't accidentally open anything. And that would be close short at this level, basically, if we get up there. Is it actually showing up? I'm not sure if it actually showed up there. Oh, trigger. Yeah, close short. So if we get up to that level above 83K, it'll close half the short. So that's a way. I know I've mentioned in the Telegram several times, like I'm going to chase the microstructure with a trigger order to make sure that I pay myself on part of my position. That's what I am referring to there. I think for the most part, that's most of the order types that I like to use. I'm just going to close everything here. No positions open, anything like that. Last but not least, guys, I do want to talk about leverage in general because it's often misunderstood. I want to talk about different leverage types. I personally like to use isolated because I know exactly how it works, basically the amount of margin that goes on my position. Worst case scenario, even if there's crazy slippage, whatever, if I get liquidated, that is worst case scenario. My margin in the isolated amount is going to get liquidated. Whereas cross margin, I'm not fluent with it, so I don't want to give you any incorrect information about it. My understanding about cross leverage is that if you are getting liquidated or your position's in trouble, it can start pulling money out of other positions that you have open, and that scares me a little bit. So I personally like to go isolated. So I would typically say if you're not comfortable with cross, leave it alone. I mean, you do what works for you. I know a lot of people that do use it and use it well. I'm scared of it because I don't fully understand it, and I just want to know what worst case scenario is, basically. Other than that, leverage versus margin, you guys, here's another thing. I know this is something that a lot of people misunderstand in their earlier trading days. I know I did when I first started trading with leverage. I often thought that, for example, right now I am on 10x leverage. So if I do 0.1 Bitcoin long right now, when I first started trading, I thought that meant my position size was going to be worth 1 Bitcoin, when in reality it's actually it's kind of the opposite. It's when you put 0.1 into a position like this on 10x leverage, the amount of margin you're putting in is actually 0.01, right? It's actually, your margin is divided by 10, and that's why it's less than $1,000 for 0.1 Bitcoin, right? So just understand that as well. One other thing I did want to mention, guys, before I wrap up here is you notice that I often talk about hedging positions. So often I will be in a nice short position and decide I want to open up a hedge just in case we bounce, type of thing. Some of you may have tried that and you may have accidentally closed positions or stuff like that. If you click on your settings here, you can change position mode from one-way mode to hedge mode. Hedge mode allows you to be able to trade both the short side and the long side at the same time. So yeah, anyways, guys, I think that's about all I really wanted to go over. Like I said, I just had a lot of people requesting a little bit more information on how to trade on Blowfin and that kind of thing. And I know that I mentioned hedging and I mentioned trigger orders and, different leverage. And also, like I said, risk management, kind of understanding that, at the end of the day, like a lot of people ask me how much leverage I use. it doesn't really matter when you have an understanding of how much you're actually going to lose on your trade. That is the most important part about trading and risk management, is understanding what is worst case scenario if I'm wrong here. So I often use high leverage amounts, but I also have an understanding of, you know, my actual position size. And if I'm using high leverage, it means that I'm getting that same position size, but tying up less margin, for example. So everyone has their own preferences. Yes, using higher leverage is dangerous because it leads to overtrading, revenge trading and stuff. And if you don't understand where your stop loss should be, there's an open level of risk there of getting liquidated, all that sort of stuff. But leverage amounts and all that sort of stuff, that really depends on the trader. Some people prefer very low leverage. Most people should use low leverage. I personally like higher leverage, but I'm a bit of a degenerate that way, I guess. But again, I have a very good understanding of how much I'm going to lose on my positions when I take a trade. It doesn't matter if I'm on 5x, 10x, 50x, whatever, right? It doesn't really matter. At the end of the day, what matters is your position size and how much you're going to lose if you end up getting stopped out or liquidated. So yeah, guys, anyways, hopefully you guys found this video useful. I wanted to bring you something useful today, so hopefully you enjoyed this. With that, I'm out. Stay safe, my friends. Peace.